Thank you for watching this video. Today I would like to sharing about anti-money laundering in Singapore, safeguarding the financial system. Money laundering enables the crimes and threatens the global financial stability in Singapore. And as Singapore is a leading financial hub and must remain the vigilant. Now, what is anti-money laundering? Is involved like customer identifications, correct the IC, collect the supporting documents, and monitoring and suspicious activity. The overview is understanding the money laundering, the definitions, the stage, and the dangers, the regulatory framework, global standards, and Singapore ecosystem, the compliance requirements, who must comply and key obligations, enforcement and best practice, the case examples and industry challenging. Now, what is money laundering? It involves three stages: placement, layering, integration. Placement is introducing the illegal funds into the financial system. The activity is, for example, is like selling the drug and then introduce these illegal funds into the financial system. Layering is concealing the source through the complex transactions. Integration is returning the funds to the criminal as legitimate wealth. Money laundering enables the terrorism, the fraud, the corruption, and tax evasions. Global Anti-Money Laundering Framework, Financial Action Task Force Standards, 40 recommendation setting, global benchmark for combating the money launderer. Basel Anti-Money Laundering Index, independent ranking of countries, money launderer risks, and international corporations, Interpol, the Egmont Group, and UNODC coordinate cross-border efforts. Singapore AML ecosystem, the controller is MAS, CAD, Singapore Police Force, ACLA. And the key legislation in Singapore, what is the purpose and what is the penalties? Let's say CDSA, confiscations of criminal proceeds. The penalty is up to 500K for individuals. TSOFA combats the terrorism finance, higher fines for corporations. MAS notice is specify the anti-money laundering, counter financial terrorism requirements, regulatory sanctions. The Company Act is like ACLA anti-money laundering obligations for the corporate service providers. Is about criminals and civic penalties. Who must comply? Financial institutions, bank, insurer, capital markets, intermediaries. And legal and accounting is lawyers, accountants, corporate service provider. Real estate is property agents and developers. The precise goods, the dealers in precise stones and metals. AML and CFT obligations is a stage like internal control, training the staff, auditor, compliance official, and ongoing monitoring, transaction scrutiny, and risk assessment. Record the keepings, maintain the document for at least 5 years. Customer due diligence is know your client and identify the verifications. Suspicious transaction reporting, flagging the unusual activities to authorities. The CDD and KYC requirements is identify the verifications, use reliable, independent source to confirm the customer identities. The beneficial ownership is identify the natural person who ultimately own or control the customer. The business relationship is like understanding the purpose, and nature of each business relationship. Enhance the due diligence is like apply EDD for the PEPs, offshore structures, and high volume cash transaction. Enhanced due diligence case, for example, PEP, political exposed persons like Trump, the individuals with prominent public functions require additional scrutiny due to the higher corruption risks. Offshore structures, complex the ownership structures may obscure beneficial owners and require the deeper investigations. Higher volume cash transaction is large cash movement present the inherent money laundering risks require the additional verifications. Thank you for watching this video.